Welcome back, guys. It's Jason with your Hopium-free crypto update. I want to start with congratulating you for being here during the boring periods of the market. 1,500 votes, 3 out of 4 people consider this time in the market right now as being boring. And that has been a feature of the channel for some time. Not boring, but being around when the market gets boring, because this is when the money is made. As the market trends down, a lot of new money and people who are just here for the good times at the peaks get burnt out, sell off, leave the market, say it's dead, it's over, screw crypto, I'm gone. But if you're here, then you're probably one of the few who have stuck around and are looking to improve your skills when it comes to trading, investing, and learning more about cryptocurrencies. So that's what we're going to look at in today's video, in particular around the topic of Bitcoin and crypto, when I think it's going to pump, and reflecting on some of the issues that have presented themselves this year. So before we crash into the video, make sure you've hit that like button, subscribe to the channel, bell notification icon. About 20% of you have that bell turned on. Let's get it to 50%. And from that point, you can follow me on Instagram and Twitter. Links are all down below. And I have a special with the video sponsor today, Bybit, giving away $4,000 US to you guys using the link down below, but I'll talk about that more in just a moment. So let's look at the charts today, the news, and of course, some of the investor psychology that goes along with these markets. We've been here for many years talking about the same cycles that have been playing out time and time again. So let's start with Bitcoin, and of course, the trend is down. We can see the yellow line here. I've thrown it on a 4-hour chart because a lot of people look at short-term timeframes. Let's stretch it out. 1 day. The yellow trend, which is the yellow line here, using our Gann swing trading, is still down. None of these highs have been broken. That is a very clear downtrend. So remember, the first thing we want to look for is a break of the swing high. We want to see a break up here to get us back into some bullish momentum. The other thing on the chart is that we are underneath our 50% level, 48,900. So essentially, I look at it as if the market is below the 50%, weak. If we're above the 50%, strong. And you're probably familiar with that from my brother's channel, Michael Pizzino, as well. So check out his content, really good stuff. Now, the other thing here is if we do continue to break down, then the 4th of December, which is our big volume bar here, we just want to see a test. I don't want to see this break down too much further and break beneath the 37 or even the 39,000 level, because then I think we would be trending in this zone for quite some period of time. And that zone is around 28,000 to 41,000. The major support level is, of course, 28,000. That is the major support level. Looking at our weekly swing, our daily swings, our monthly swings, all the big stuff comes in at around that $28,000 to $29,000 level. So we're not there yet. Let's see if the market can hold itself up and stay within the strongest section of the macro market here, which is above that $36,000. All right, so the swing low weekly is at 39,000. Currently got that low in at around 42,000. So Bitcoin and crypto, we want to see this thing pump. Ethereum looking stronger. So this is a good sign for the markets as well. Still above its short-term 50% level at 3,700 just. But if it breaks down, the next major level is 3,200. And then it still has its major 50%, which is all the way back down at 2,400. So there's still a lot more support to the downside for Ethereum than there is for Bitcoin. So while that's in play, I'm still quite bullish on cryptocurrencies in general. If it breaks down that $1,700 support level, then we could probably say that this cycle has had it's run its course. It's gone all the way from $80 to 4,800. 1,700 is the major breakdown point, and we work out what we need to do from that point. But at the moment, we're still well and truly above those levels, but they're important just to keep an eye on as well. Going to the ETH BTC chart, you can still see Ethereum pretty strong above Bitcoin, holding its line above the previous recent high of around 8%, so 8% of Bitcoin's value. This is still looking pretty strong. Of course, if we break down back into the triangle zone, then it's a grind sideways. And if that happens, then we could probably see Q1, Q2 of 2022 as a bit of a grind for Bitcoin and Ethereum. But of course, we're looking at when will Bitcoin explode? Like, what is going on? How do we continue to get these bearish scenarios, but we continue to think that the market is going up? Well, as we covered it in recent videos, just even yesterday, looking at the Bitcoin dominance getting absolutely crushed, the rest of the dominance is then moving into ETH. So it's pretty much the same chart, but flipped. So if I throw it on an invert, you can see here that the market has been what looks like to be trending down, similar to the Bitcoin dominance trending down. But of course, this is flipped. So if we invert it again, the Ethereum dominance is increasing. So you can see ETH dominance, as that increases, then this is a lot more money flowing into Ethereum and other cryptos on the Ethereum network. We've covered things like NFTs. So NFTs here in the blue, they are on the up. Since January, which they were unheard of, you can see here on the Google Trends, the blue line is at -1 compared to the search term of Bitcoin and crypto. And as the year progressed, NFTs are now starting to rival search terms like crypto and Bitcoin. And it's getting very close to crypto at this point in time. If you were to search that, it's almost the same sort of search volume in NFTs as there is in crypto. And of course, where a majority of the NFTs, we know they're on Ethereum. And so we're seeing a lot of the money moving to Ethereum. So a lot of stuff is getting built out now on ETH. Now, before we get into the news as to how this can eventually pump, I've got Bybit linked down below. That is the sponsor for today's video. But check them out. If you are signing up between this period now till Christmas, they're giving away $4,000 to the viewers, to you guys, if you sign up, deposit, and of course, use the platform as well. So check out the link down below, sign up, and go in the draw to win $4,000. And even if you don't, you have the option to get up to $4,100 just by using those links down below and following their sign up process as well. This is a non-KYC exchange as well, so that's always a good thing to have a look at, so that it gives you some options of non-KYC along with your KYC exchanges. So some of the reasons that I've been looking at for this potential pulling back, this hold down of Bitcoin and cryptocurrencies, is of course the uncertainty in China, the uncertainty with the Fed. So they're looking to hike interest rates, which of course brings some uncertainty to our markets. And then also the US dollar has been strengthening. As much as there is all of the news about hyperinflation, heavy inflation, the US dollar collapsing, all this sort of stuff, the US dollar is strengthening. There's no two ways about it. You look at a chart, the price trend is up. This is the chart of the US dollar. And we've looked at this in previous videos, double bottom, very clean move all the way up. And it is attempting now to get above its 50% level, above that 96.5. So the US dollar, which is rated against a basket of other international currencies, the likes of the euro, Swiss franc, Japanese yen, Aussie dollar, British pound, there's about 7 of them in there. It is strengthening against all of these major cryptocurrencies. So while that occurs, that then puts a little more pressure on the rest of the markets. Having said that, you know, we've been following the 18.6 year cycle for many years now on the channel. I've been watching this since around 2012 when the cycle just began. So we're in 2021, leading into 2022 now. And in this cycle, we are getting close to the top. Top's in about 4 or 5 years. Now you might consider, well, this is absolute nonsense, it's weird, it's ridiculous. I encourage you to check it out for yourself. But in the meantime, if you don't have the time, we're in this stage here, 2021 to 2024, when the real estate cycle is in full swing. The property prices are going up. Everything is going through the roof in terms of pricing. Now, we will see a lot of this news. China housing market slumps again. More developers running into trouble. Evergrande defaulting in China, and there's a lot of other cryptocurrencies, businesses that are tied to Evergrande. So if Evergrande collapses, then they say that the flow-on effect will be into those businesses as well. But you guys know, you've been following the channel, we look at the wall of worry. So bull markets, this is a really strong sign of bull markets, that they continue to climb on the back of all of this worry until the cycle ends. So we have all of the signals here for when a cycle ends. We're not there yet. The cycle's coming up in around 2026. So that's what we're looking for here. Doesn't mean crypto will get to a peak in 2026, but at the moment, the cycle is still up for land, for stocks, and at the moment, crypto is still holding up at this point in time. So the wall of worry, which you can see here, if you just look back on just even recent history, from March 2009, which was the bottom, you can see a lot of times that there were reasons to sell. A lot of bad news massive news coming out. And as I've been following the market since 2010 very closely, and in property since 2006. I've seen and felt these cycles many times before. So these things continue to run up on the back of all of this bad news. No matter what people say, the cycle is still up. We're climbing a wall of worry. And what happens in the reverse is a slope of hope. So this is the time which you might have experienced with your cryptocurrencies as they trend down and down and down. The slope of hope really kicks in. So people are hoping that it's going to go back up. The opposite is true for the bull market, the wall of worry. Every time we climb up, there's something bad that comes out. So that's, at the moment, how I continue to stay so bullish macro, the big picture, in a market which continues to look like it's about to crash to new lows and be dead forever. While we look on a macro chart, the market is still up. Cryptocurrencies are still in a bullish uptrend for the majors at this point in time. And yes, there are a lot that are having a really solid haircut. So keep those on your watch list. In particular, the metaverse, which has got major pumpermentals. It can take off, but at the moment they're having a really solid haircut because we have pumped up so hard for 2021 in those cryptos. But as for Bitcoin on a macro, we look like we're in a consolidation period before we potentially, there's no guarantees just yet, but potentially looking to break out of these highs of $69,000. So if you guys want to stay up to date with the news of the cycles, the macro view of all of our financial markets, and of course into cryptocurrencies where the goings are much easier than in some of the traditional markets, make sure you subscribe to the channel, bell notification icon. Let's get that up to 50% of you guys hitting that bell. Like the videos up so that you tell YouTube to get these videos through your newsfeed, and we'll be here every step of the way. Make sure you look at that Bybit link as well if you want to score yourself up to $4,000. Link is down below, and I'll see you guys on Instagram and Twitter. Make sure you're there watching that wall of worry throughout the 18.6-year cycle. We've got several more years to go. Lots of good news happening in Australia. Property prices are booming. 25% annually across the board is absolutely massive. And we still have a few more years of that to go. Catch you guys at the next video. Until then, have more fun to get more done.